Last year, I looked at 2018 as a year that I figured would be a year of epic market disruptions, and certainly towards the end of the year, we started to see that. The equity markets got hit very hard. Then we had the Powell pivot to start this year, but I still believed at the start of the year and believe now that we are going to have some very significant market disruptions before this year is over with. And so the real question is, in my mind, is when risk is off, where will the money flow? Will it flow into treasuries as it normally does? Or might gold get a piece of the action and we start to see gold prices rising fairly dramatically? Now, there have been a number of years here. The pink lines show years in which they're down years for stocks and for treasuries. That is, money didn't necessarily flow into the treasuries. It came out of stocks, and gold was up significantly during those years. Well, very significantly in some of the earlier years. The only time when gold didn't go up when this happened was in 1981 when Paul Volcker raised the interest rates to double-digit levels. My first mortgage was a 17.5% mortgage, and that killed the gold price back then. Now, Eric sort of talked about this yesterday. We have sort of a divergence and abnormality here in the way the markets are trading. Normally, when stocks go up, the yields go up on bonds. Money comes out of bonds, forcing the yields lower. But what we've been seeing since about February, we're seeing the U.S. Treasury yields go down while stocks are going up. And Eric was suggesting, and I agree with him, that probably the bond market usually has it right. And so the bond market may be hinting that we're heading into some troubles in the equity markets. Gold certainly hasn't received much of anything since that's occurred. We're not really seeing gold go anywhere so far this year. I think that will change, but so far. The dollar is remaining strong. Dollar index is remaining strong despite the Powell pivot. We have the U.S. Economic stats for whatever they're worth, and I think that Wall Street pays a lot of attention to the stats. I think there are a lot of statistics that they don't pay attention to that suggest the economy isn't anywhere nearly as good as the Trump administration would like everybody to believe it is. And of course, the interest rates around the globe are lower, with many countries heading to zero or negative interest rates. So that is helping the dollar, obviously. This chart suggests that the bond market is probably right, that we are heading into some difficult times in the equity markets. It shows a divergence between the S&P 500's performance and where S&P forward earnings per share expectations are. So that would be more lined up with that divergence with the bond and equity markets, in my view. Long term, we have some real problems in the debt markets, obviously. We have, since we started the Keynesian economics, which all Western countries follow, we have built up debt. The debt loads are increasing dramatically. And for a while, they helped. And more new debt would generate new GDP. But now you can see the debt is growing much more rapidly than GDP, and it's even counterproductive. So you can kind of see the yellow line is real GDP, or nominal GDP, I should say, and you can see the debt, the productive debt. And so we are digging ourselves into a deeper and deeper hole. This is a slide that really, I think, tells it all in a way. It shows what happens right now. There's $22 trillion of debt in the U.S., and so a 1% increase, increases $220 billion of debt that goes into place that the United States is going to have to find a way to fund. So back in 1971, when we went off the gold standard, 1% increase in the interest rate would have raised the debt load by $3.7 billion. So you can see it's getting out of hand. And clearly, when the interest rates start to rise, you've got to know that the guys in Congress are getting very nervous and going to put a lot of pressure on the Federal Reserve to lower rates, because it means they're going to have all that much more trouble finding the goodies for the people that vote for them. This chart, I think, also tells a real story about what debt is doing to us. If you subtract debt away from the cumulative GDP, you can see what's happening since the financial crisis. I mean, it's, you know, assets minus liabilities. It's a fair equation to tell you how much you're worth. And clearly, we're losing out. Another long-term chart here shows that what's going to happen with entitlements kicking in, the baby boomers like myself, it's going to really start to bankrupt the United States Treasury, no doubt about it. And of course, we're continuing with wars everywhere. Mr. Trump suggested that we should probably pull back and not be changing regimes everywhere, but there's pressures on him to do that for sure. And so we have a military that just can't find enough projects to spend huge amounts of money on. So we're in big trouble. Pension funds, the Illinois Teachers Fund is running into big trouble. They make these assumptions of 7.5% returns. So they've had to raise $500 billion. They've had to raise taxes in Illinois by $500 billion to keep the Teachers Fund solvent. And of course, that is causing people to leave. Illinois as one of the states. All of the more socialistic, Democratic-controlled states are losing populations because taxes are going up very dramatically. Now, closer to the time now, I mean more urgently, is this chart. I think it shows auto loan delinquencies. They're surging to a level where they were last back in Q3 of 2009. I mean, that's a pretty significant time frame. You know, when you look at that, that was really a stressful point in time, and here we are with auto delinquencies, 90-plus days delinquent at that level. And this is the one that really sort of freaked me out when I saw it. The trade to the world, the European Union and advanced economies, and it's showing it's just plummeting off a cliff. So we're back to the point now where we were also 2008, 2009 almost. And of course, the trade wars, the trade disputes, no doubt, are a big part of that. But who can be comforted by that when you realize that, you know, it's maybe it smacks of Smoot-Hawley in the 1930s, very possibly. In 1971, we went off the dollar ceased being backed by gold, and thanks to President Nixon. Ron Paul would like to go back to the gold standard, and some other people, interestingly enough, some people that Trump is proposing to be placed on the Fed have had some have made some noise about a gold standard sometime in the future. Two of those three, though, have been ruled out. So, but the problem, you know, Trump, he wanted to try to restore jobs, quality jobs to the middle class, and the problem. The tariffs are really aimed at reversing what has been going on. You have to realize that in order to have the world's reserve currency, you have to systematically run deficits. You have to run trade deficits so that there's enough cash out there circulating around the world to become the world's reserve currency. So Trump's policies, when he ran for president, he wanted to reduce. He wanted to reduce military spending. He wanted Europe to pay for NATO. A whole lot of things. Wanted to reduce the military spending, all kinds of things that he wanted to do that would pull money back instead of push it out into the world. And that's counter to having the world's reserve currency. Triffin's dilemma is something you might look up sometime. Triffin's dilemma talks about this and why it's the pressures on the president not to do these things that might be very good for the middle-class Americans, but not good for the ruling elite and not good for the military-industrial complex and others that have a vested interest in massive amounts of deficit spending, which is running us into bankruptcy. So the real question is, how long does the dollar retain its status as the world's reserve currency? And that's Hugo Salinas Price. I don't know if you know him. He is a billionaire industrialist from Mexico. Very much a silver bug, I would say, and is very much a hard money guy. he pointed out recently in an article that he wrote that in the last over roughly 5 years, that the U.S. has increased its cumulative trade deficit by $3.6 trillion, and yet the amount of dollars held by foreign central banks, and primarily in China, has decreased by about 4%. Well, how could that be? How could you have this surge of dollars around the world? His theory is that the Chinese central bank, and others probably too, they're buying gold with their dollars, and so the dollars are in the hands of private citizens or other Chinese people outside of the bank, who then are using those dollars to buy up assets around the world. And that way is sort of a backdoor way of getting rid of the dollar, the Chinese are, without disrupting the markets so that they pull the rug out from underneath the value of their treasuries. So that, I think, maybe that's an inkling of where we're headed. Certainly China, it's the world's largest gold producer. It also is importing massive amounts of gold. Not the central bank so much, or at least the central bank doesn't tell us necessarily what it has. So we're seeing this massive amount of the policies are in place to encourage the Chinese people to import gold, to hold it. So the question is, if the Chinese were so happy owning dollars, why would they be putting so many resources into purchasing gold and mining it in China? I'd suggest they're getting sick and tired of the dollar, probably. India also, of course, naturally have been big importers of gold for many years. This shows China and India. The little darker red area that you can see on the chart is the central bank holdings of gold in China. And what we're seeing is massive amounts. Just the underdeveloped countries are the ones, the countries that are kind of considered to be enemies, or the countries that the U.S. are bad-mouthing all the time. The propaganda is against the countries that are buying gold, I should say. China, obviously. Russia is building up its gold reserves too. Countries that are not liking the dollar. I think that's the key. Countries that decide they don't want to have the dollar, when Saddam Hussein's days weren't long-lasting after he decided that he wanted to get paid in euros instead of dollars, maybe there's a connection. But clearly, the first thing we did when we got rid of Saddam was go in and put huge amounts of dollars, literally physical dollars, into Iraq. Billions of dollars were delivered. So where do we go from here? Will the Trump policies make America great again? The whole idea of making America great again. And I think the middle class voted for Donald Trump. I grew up in Ohio, and I can tell you that the people in the Midwest are decimated. The high-paying jobs that I knew in the 1950s when I was a young fellow, my father worked as a machinist for years. Those jobs are gone for the most part. They've gone overseas, and they had to go overseas so we could run these deficits so that the elite could finance its wars. I mean, the reason we went off the gold standard in 1971 was so that the military-industrial complex and the empire could expand and could finance wars without taxing the American people to pay for it, because the American people wouldn't have put up with it. A little bit of socialism too with Johnson, all that was, but his policies were clearly geared towards restoring the middle class in America. Whatever you think of Trump, I think that's what he was trying to do. The problem is that runs counter to the need to hold the reserves currency, the world's reserves currency. So there's endless domestic spending, and we're seeing OAC, Ocasio-Cortez. I mean, I've never seen a time when the left has been so aggressive in the United States as it is now. And so endless amounts of spending, that's what we're looking to. Artificially low interest rates, it's a misallocation of capital. Capital goes into places that are not efficient. I mean, would the pot-smoking stocks be doing so well if we had a gold standard? I doubt it. I mean, a lot of things you can point to. Anyway, it's really, the problem is, will Trump make America great again? I doubt it. I mean, I think that with all this debt that we have, there's going to be hell to be paid in one way or another. How are we going to get out of this thing? I don't know. But print, I mean, yes, how can the Fed not start printing money and doing it massively with quantitative easing again, probably making the last one look like child's play, because of the problem is that the debt just keeps growing much more rapidly than, it's growing exponentially, much more rapidly than income. So that's the question, which way are we going to go? Are we going to, which way, when the risk is off, and I think we're going to see it, I think we're starting to see it in the equity markets now. We're starting to see, I think we could be in for a real rough time in the big equity markets. And then the question is, where does the money flow? Does it go into treasuries? For sure it does. It will, to start with anyway. But will gold pick up some of that? I think it will. And it doesn't need to be too much of it to drive gold prices significantly higher. So that's really all I have to say. I'm a little bit under my time, and that's a good thing for a change. My wife is usually here, and she would be very pleased with me today. I shut up a little early. She's usually waving to me, your time is up. She goes, time is up. So anyway, I'll let her know that I was a good boy today. So let's jump right into, the main thing is that we have a lot of really good companies. And I just said that I'm very pleased with the 5 that I invited here, the ones that are here today. I've been trying to get Gold Source here for some time. Finally, they're here. It was just about a year ago or so, we did a panel discussion, and Scott Gibson stood up from the back there somewhere and made all of us say who our favorite company was. And, being an old guy, I couldn't remember the names on my list, and the one that came to mind was Gold Source. I knew that 3.5 cents in U.S. money, and they had something that was worth something there. I had no idea they were going to come across a very significant game-changing discovery, and we'll hear from Giannis in a little bit about that. Radisson Mining Resources, it's a company that's exploring the O'Brien gold mine in Quebec. It was a very rich, one of the highest grade mines. I think this is a very low-risk exploration story that people aren't paying very much attention to. They will, I'm quite sure. Strike Point Gold is a company exploring very highly prospective ground in the Golden Triangle, and I think that Sean will tell us that the goal of the company is to build a resource that will be attractive to some of the other companies, larger players in the area, one in particular. Rise Gold Corp. I mean, my goodness, this is a story that anybody that misses this one, too bad, because this is going to be I think this is going to be a winner. Now, it's one of the highest grade gold mines in the history of the U.S. It was shut down in the 1940s because of the war. They were going to double their production. They had an average grades of 16 grams per ton. It's still there. It's down deep, and they've drilled several fold further down, I think 2 or 3 times. We'll hear from Ben. And they're still getting the same kind of grades. And some people think, well, it's in California, they can't be permitted. I think Ben will, I'm convinced now, after having looked at it carefully, that a lot of naysayers saying they don't think the project will go into production. Yamana is there, putting money into it. I think Yamana figures it will. And then GFG Resources, really like this one. It's just a real new one on my list. And they have Newcrest, one of the biggest gold mining companies in the world. They're in the option period. They can opt out if they want to, but I expect they'll opt in. A very significant, let's say, Rattlesnake, the name of the project slips my memory. A big gold porphyry target there that Newcrest is really interested in. And and then they have a very attractive prospect in West Timmins that has been overlooked for the longest of time. So these are the companies that are up here, and I hope you'll pay close attention to all of them, because I think they're all really wonderful stories. So let's start off. We'll start off now with Radisson.